Hi, I'm Mary Wilson Keener, your Frisco CPA. Today I'd like to talk with you about the Fiscal Cliff Act. It is an act that permanently extends certain provisions from the Tax Acts of 2001 and 2013. It also addresses the alternative minimum tax. The law temporarily extends tax provisions that lapsed on December 31st, 2012, as well as those that expired on December 31st, 2011. So if you have done recent tax projections based on the 2012 information that we had, well, those will need to be recalculated. Among the provisions not addressed was the expiration of the temporarily lower 4.2% employees portion of Social Security that reverted back to 6.2% on January 1, 2013. The tax rates that were in effect in 2011 are now permanent for 2012 and beyond. Well, at least they're permanent until there's another tax law. The rates 10, 15, 25, 28, 33, and 35 are still in place. The new top rate of 39.6 is imposed on single taxpayers making more than $400,000 taxable income and marrieds filing jointly making more than $450,000. You might notice that $450,000 divided by 2 is $225,000 for each married partner. So there is somewhat of a marriage penalty in this provision. Well, it's back. For 2013, the phase-out of itemized deductions and personal exemptions. The phase-out is reinstated at $250,000 for singles, $275,000 for heads of household, and $300,000 for marrieds filing jointly. Phase-out means that the amount begins to decrease and disappears within a range of income. Itemized deductions also include a total of combined medical expenses, mortgage interest, real estate tax, contributions, and unreimbursed medical expenses. The personal exemption is the amount subtracted for each dependent, so both of these can be affected and decreased. The capital gains and dividends for 2013. Taxpayers in the middle tax bracket remains at 15% on capital gains. The 10% and 15% bracket will pay 0 on capital gains, and the top income bracket will pay 20% on capital gains. However, the new 3.8 Medicare tax for higher brackets begins at the $200,000 level, so the total amount can be 23.8% for the top bracket on capital gains. The exemption for the alternative minimum tax on individuals is permanently indexed for inflation. The AMT tax is not understood by many taxpayers. Basically, it is a tax calculated by a totally different formula, adding back itemized deductions and other items to arrive at a minimum tax that should be paid. If the tax calculated by the tables is lower, then the alternative tax is used. The individual credits that have become familiar that expired either at the end of 2011 or 2012 have been extended, like the American Opportunity Tuition Tax Credit, the $250 credit for teachers, the deductibility of mortgage insurance premiums, the deductions of either state income tax or state sales tax, the tax-free distributions from individual retirement plans for charitable purposes. Now, the increased expensing amounts under Section 179 are extended through 2013. This allows depreciable business assets to be depreciated 100% in the first year. Check to see that the asset you have purchased meets the guidelines. The 50% first year bonus depreciation was also extended for 1 year. Apart from the Fiscal Cliff Act, there's a new Medicare tax that begins January 1, 2013. It is an added 0.9% for those making over $200,000 single or $250,000 for marrieds to the 1.45% that currently exists. Well, that's restated as 2.35% for the amount when your income is over these amounts. From what I have read, this will be a tax calculated independently from income tax or alternative minimum tax. And we have done another video on the new Medicare tax that is applied from the Affordable Health Care Act of 2010. Please refer to that detail for more details. This new law may be overwhelming to some. My recommendation is that you seek our advice on how your tax situation for 2012 or 2013 will be affected. Mary Wilson Keener, 972-377-7078, your Frisco CPA.